Today, consumer confidence plummeting to its lowest level in 6 months. We'll look at what it means for the economy. We might see fuel prices go up even more soon. Ida forced oil production in the Gulf region to shut down. Now experts say you should expect price fluctuations heading into Labor Day weekend. And South Korea passes a bill that threatens the dominance of Google and Apple, limiting their control over payment systems. That and much more, coming up on NTD Business. Good evening, great to have you with us. I'm Paul Graney. 750,000 renter households in the United States could lose their homes this year, according to Goldman Sachs. The Supreme Court just ruled to lift the federal ban on evictions, opening the door for property owners to evict residents behind on rent. The government has put aside money to help tenants and landlords in need, but it's been slow reaching households. Only $6 billion of rental assistance has been paid out so far, out of $46 billion. Treasury officials blame application processing delays for the slow disbursement. They're warning that if the pace doesn't pick up, the money will be reallocated to other programs. Goldman estimates that up to 3.5 million American households are behind on rent, and landlords are owed as much as $17 billion. And U.S. consumer confidence fell to a 6-month low in August. That's according to a survey by the research group, the Conference Board. The group says the resurgence of the virus and inflation concerns have dampened confidence, but it says it's still too soon to know if the inflation worries will result in lower consumer spending in the months ahead. The survey shows consumers less inclined to buy home and big-ticket items like cars and major appliances over the next 6 months. Still, more plan to go on vacation, indicating a rotation in spending from goods to services. Another report today shows the housing market remains red hot, with many buyers still priced out. One major price index surged 19% in the year through June. That's the biggest annual gain ever recorded by the survey. The largest year-over-year gains were seen in Phoenix, San Diego, and Seattle. And joining us to discuss today's numbers is economist, investment manager, and author Milton Ezrati. Most recently, the chief economist for Lord Abbett, one of the oldest investment firms in the United States. Now he's the chief economist at Vested. Last time consumer confidence fell, the government passed massive stimulus bills. Asked Ezrati if this could happen again or if inflation is just running too hot now.
Well, we already have 2 new stimulus packages in the pipeline. We have the infrastructure package, which is still not law, and then we recently had this $3.5 trillion budget reconciliation. So adding to that is not going to help. That's already a huge amount of stimulus.
Do you feel these big packages will make the Federal Reserve's argument about temporary or transitory inflation, does it go up in the air? Are we looking at more sustained inflation, do you feel?
I fear we are. And I think that the comments by Jay Powell, chairman of the Federal Reserve, saying this is transitory or temporary, I think they're more wishful thinking than a hard-headed analysis.
As an investor, or when you're advising investors, what are the risks you look out for in an environment like this?
Well, I think the inflation is the issue. Of course, with the Delta variant, we can hope that vaccines remain effective and become more widespread, and that, I think, is a reasonable expectation. With the inflation, I think we have to watch for the next steps from the Federal Reserve. Jay Powell has already indicated that he is going to have to take action on the inflation, and he said he would slowly stop the tremendous provision of liquidity that the Fed has been providing markets. If the inflation persists, he will have to accelerate that program. That would mean withdrawal of liquidity from financial markets. It would mean rising interest rates, probably not for some months, but rising interest rates. And that I would take as the end of this great rally we have been enjoying for quite some time.
So what happens when investors know that the Fed or think the Fed will start to withdraw some of this liquidity? What happens to the markets, even the housing market?
Well, the housing market might do well. Even though the rates were going up, people might run to housing as an inflation hedge. That's what's happened in the past. But the stock market would suffer considerably in that environment. We'd have a slower economy, slower profits growth, and higher interest rates, none of which are particularly attractive to equity investors.
Do you feel that it's this support more so than the economic recovery that is driving this stock market rally at the moment?
Well, I think that the rally has some room because I believe the recovery will persist, albeit at a slower pace than we've grown accustomed to. But in the long run, unless this inflation really is transitory, and I have my doubts, it would mark the end of the rally, yes.
Some people say that equities are quite a good investment during inflation if you have companies who can pass on the inflation and the price increases to consumers. What do you think?
I think that is probably a good long-term bet, but they're going to suffer in the interim because rising rates hit all equities negatively, not all at the same degree, but they hit all equities. So there would be a downward adjustment, and then you would start to win with the companies who can keep up with inflation. Yes, that certainly has been historical experience.
What happens in the bond market at this point?
Tears. Because if they start raising rates, it means capital losses. These bonds have very low yields right now, so they can't even cover for minor capital losses. I don't want to sound too pessimistic. Perhaps this is a transitory inflation, and we won't have to experience this. But if it persists, it will be very bad for the bond market. Equities would have a pause, a downdraft, and then start to recover. Bonds would suffer for a much longer time.
Do you think the Fed are worried about a kind of credit crisis in the bond market? Do you think this is a concern for them?
I think it is. And I think the Fed is worried that if they move too quickly or too radically, they will precipitate it. So they're, as I say, wishful thinking that the inflation is not as bad as it looks right now and that they won't have to move that fast. But if the inflation could force their hand.
Milton Ezrati, Vested. And the National Restaurant Association is worried the Delta variant could hurt the restaurant recovery. It says nearly 1 in 5 adults surveyed in mid-August said they stopped going to restaurants as Delta cases rose. Total annual sales at restaurants are expected to rise more than 19% from last year, but that'll still be nearly 9% lower than before the pandemic. Some fast food chains like McDonald's, Taco Bell, and KFC are closing indoor seating areas or limiting hours of operation. 3 in 5 respondents said they changed the way they dine out because of the Delta variant. Many are ordering takeout and delivery, sitting outside, or just flat out canceling plans. And restaurants waiting on corporate workers to come back to the office are out of luck. Google is again pushing back its return to the office plans. The company said today it's allowing workers to work from home through early January 2022 instead of October this year. As not just Google, companies, both big and small, are delaying returns to the office. Here's more from one expert on why companies should be ready to make more adjustments.
The Delta variant surge putting return to office plans on hold.
The Delta variant is shifting the conversation away from we must get back to work to, oh my gosh, we have to think really critically about what work means now.
Consultant Amber Cabral says many of her clients are on wait-and-see mode as tech giants join the growing list of companies pushing their plans months into the future. Facebook, Amazon, and Apple delaying a return to corporate offices until at least January. Lyft pushing the return even further to February. Cabral says managers are counting on employees to be patient and flexible.
This isn't just a conversation about what's going on with the Delta variant. It's also a conversation about people modifying their lives. You've got the folks that were eager to get back that are really frustrated. And then you have the folks that are like, great, because I wasn't ready to go back into the office.
The delay is giving managers more time to encourage or in some cases mandate vaccines. And with some industries facing labor shortages, employers say they don't want to lose anyone over mandates or force them back to the workplace too soon. But with about 18 months out of the office, some workers aren't yet ready to give up the flexibility, comfort, and safety of working from home.
I'm producing more work. I can be held accountable virtually. I don't actually need to be physically in the office.
And patients who get hospitalized because of the CCP virus are going to have to start paying some of their own hospital bills. Waivers that were in place at many insurance companies are coming to an end. NTD's Phil Zoe has the details.
Insurance companies are asking CCP virus patients to start paying some of their own hospital bills. Since the pandemic, most private insurers waived the out-of-pocket costs for COVID-19 patients. By November last year, almost 90% of insured patients didn't have to pay out-of-pocket for costs such as copays and deductibles. That's according to the Kaiser Family Foundation. But starting November this year, over 80% of the country's largest insurance companies will start charging again. Hospital treatments for the CCP virus can average anywhere from $15,000 to $25,000 or more, according to Fair Health data. But insured patients won't be on the hook for the full treatment costs, only a fraction of it. The KFF says the average deductible for an employer health plan is around $1,600, and the average out-of-pocket costs for a patient admitted for pneumonia, which has similar treatment for people with COVID-19, is around $1,300. Phil Zoe, NTD News.
And Wall Street's main indexes closed marginally lower on Tuesday. The S&P 500, though, still managed to close out August with a solid gain, marking the 7th straight winning month for the benchmark. The Dow fell 39 points, about 0.1%. S&P 500 lost 6 points, also about 0.1%. The Nasdaq dropped 7 points today. And the hurricane that hit Louisiana this week could drive up gas prices over the next few days. Some experts expect an increase of at least 20 cents a gallon. Others, though, aren't too worried. Here's NTD's Evelyn Lee with more.
Tropical storm Ida could drive up gas prices for the next few weeks. More than 95% of Gulf oil production was shut down before it hit, and every active drilling rig was evacuated. Denton Cinquegrana, chief oil analyst at Opus, says that a significant slice of U.S. refining capacity was impacted.
The refineries that were impacted by the storm in that kind of New Orleans area, probably represents about 12% of total U.S. refining capacity.
Some experts think that fuel prices could see a big increase. An economist at Boston College predicts a jump of at least 20 cents a gallon. But others like Cinquegrana say prices might rise at least 5 cents a gallon.
I think it's more towards that lower end of that range, in that 5 cents a gallon area. Right now, the national average is about $2 or $3.15, which is only up about a penny from about a week ago.
A AAA spokesperson says it's still too early to know the impact of any damage on the oil and gas industry, but motorists should expect price fluctuations leading into the Labor Day weekend. One expert says gas shortages are only likely if people panic and rush to gas stations like they did after the Colonial Pipeline ransomware hack. But Cinquegrana expects demand to decline over the next months, and not only because of road closures and power outages after the storm.
They've seen heavy travel and probably pretty solid gasoline demand. I think that is gonna drop off as we get into the fall and winter months.
He also says the good news is that the Colonial Pipeline resumed operations on Tuesday morning. Louisiana officials are now asking people to avoid unnecessary travel while they're assessing the damage and start recovery efforts. Evelyn Lee, NTD News.
And workers at Walgreens are getting a pay raise next year. It says it's upping its starting wage for all hourly employees to $15 an hour. The pay increase will be rolled out in phases, with the first bump happening in October. But the company says the starting pay will not fully hit $15 an hour until November 2022. Walgreens has 190,000 employees working across 9,000 locations in America. And South Korea's parliament passed an unprecedented bill today, targeting Google and Apple's dominance. If it's signed into law, it would prevent the tech giants from forcing developers to use their payment systems, which usually take a 30% commission on all transactions. NTD's Colin Frederickson has more.
개정 법률안 대안은 가결되었음을 선포합니다.
South Korea has passed a historic bill that would make it the first country to let app developers avoid Google and Apple's payment systems. Developers usually have to use those systems, paying commissions as high as 30% on every transaction.
It's going to be really interesting to see how consumers react, how many consumers do choose out-of-app payment systems, and that'll have something to do with how many developers choose to proceed that way as well.
Jessica Malugin, a director at the Competitive Enterprise Institute, says the two systems are relatively trustworthy, easy to use, and secure. It is uncertain how much developers and consumers will be willing to part ways with these attributes.
It's a little bit of an experiment that South Korea is going forward and doing it first. So we'll have to see how consumers feel about trading off a lower fee possibility for perhaps less privacy, less guarding against fraud, less convenience.
Google told CNBC the commission helps keep Android free, while Apple says the bill will put users who purchase digital goods from other sources at risk of fraud. Both have been experiencing political pressure.
The goal of any of these marketplaces is to allow healthier competition through innovation. So locking them down actually holds back the growth of all development.
James Deegan, founder of video game development firm Megacat Studios, says the law sets a foundation for healthier competition. However, he also says there's a lot of strategic value in using Apple and Google from a developer's standpoint.
It's very valuable and simple to have best-in-class, platform-ready, seamless opportunity. Having that ready-to-go package that you know is going to work exactly correctly every time, in line with legislation requirements and tech requirements.
Some 180 lawmakers voted in favor of the bill. Google Play Store sales in South Korea were estimated at $4.3 billion last year, while Apple Store sales were estimated to be $1.4 billion. South Korea's president is expected to sign the bill into law. Colin Frederickson, NTD News.
And the U.S. says it's concerned about risks to national security after a Chinese firm agreed to acquire a semiconductor chip manufacturer. It means the U.S. might not give the company clearance. Magnachip is an American company that produces display and power chips, but it has facilities in South Korea. In March, Chinese private equity firm Wise Road Capital agreed to acquire Magnachip in a deal valued at $1.4 billion. A committee under the Treasury Department ordered the deal be put on hold in June before the Treasury Department's latest statement. Magnachip was looking at its next steps, but it doesn't guarantee it can meet requirements that would allow the sale to go through. It's another blow to Chinese companies trying to invest abroad in critical tech industries. The global shortage of chips has led to calls for the United States to rely less on China. And just like in the US, shoppers in the Eurozone face a surge in prices. Inflation in the region hit a 10-year high in August, with price rises jumping to 3% this month. That's well above analyst forecasts and way clear of the European Central Bank's 2% target. Food prices and energy costs were one of the big drivers, the essential items. The central bank has repeatedly raised its inflation forecasts, only for the actual numbers to come in even higher. Even so, policymakers argue that one-off factors are driving the rise and inflation will soon cool off. A muted market reaction to today's numbers suggests investors maybe buy that, at least for now. But with price rises in Germany projected to hit 5% in the coming months, memories of hyperinflation are coming back. The ECB is also committed to continue its $2 billion bond purchases until next year, when policymakers next meet in September. They'll face tough questions and mounting pressures to act. And I recently sat down with the CEO of the largest independent real estate broker in New York City. Frederick Peters has led Warburg Realty for 30 years. We talked about leadership, family, and the arts. The interview will premiere on NTD.com and YouTube tonight at 9:30 p.m. Eastern, but here's a short clip of the interview. You've chosen to stay independent, one of the last remaining large independent brokers.
Last man standing.
The last man standing. Is there a particular reason? What are the advantages of staying independent?
That's a funny question. My immediate reaction is I hate having other people tell me what to do. But actually, it's largely been situational. I've really enjoyed running the company, and nobody has come along so far who made me think that being allied with them was going to make it better for my people. And when and if that person comes along, then I will be totally open to considering it. But until that time, I want to make sure that anything that happens to the company has to be a really good cultural fit, because I haven't devoted 30 years of my life to building this culture in order to see it vanish into some larger organization which doesn't believe in what I believe in.
What is that specifically?
First of all, integrity. I believe in the fact that you mean what you say and you say what you mean. And you're not just giving the answer you think people want to hear. I believe that it's more important to do the right thing than to close the deal. So if it's a question of walking away because doing it would require you to behave in a way which violates your essential moral principles, that, of course, is making the assumption that you have essential moral principles, which I fear is not always true in the world of business these days. I'd rather have the principles than the money. I would say that really is my core business philosophy. Treat people right, tell the truth, and remember, one of my brokers actually recently quoted back to me something I say all the time, which is, if you come into me and say you have a moral dilemma, you almost certainly already know what the right solution is. And you're coming into me to find out whether I'll give you permission to do the thing that you already know is probably wrong, but you also already know that I'm probably not going to give you permission to do it.
A lot of people might say the business is too cutthroat, is too tough. You got to make tough decisions. You got to promise big and then try and work it out. But from listening to you, you feel integrity. You have to mean what you say, and I believe only say something if you know you're going to actually carry it out. But how difficult or how advantageous maybe has this been for you in business?
You always have to make tough decisions no matter what you're doing. It's not just in real estate. You're doing that no matter what business you're in. Advantageous. It all depends on what you mean by advantageous. There are definitely times when it hasn't been financially advantageous, but I do believe that there are things more important than money. That's not a popular point of view at the moment in our world, but my good name and the good name of the people who work here matters more to me than the last dollar. It always has. It always will.
You can watch the full interview tonight, 9:30 Eastern on NTD.com. And still to come this evening. In the near future, you may be able to hitch a ride without a driver. This as Korean automaker Hyundai unveils its new Robotaxi this week. And Hongkongers eager for a vacation look closer to home instead of abroad. We take a look at some luxury campsites that are turning city dwellers into glamping fans. That and more after this short break.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
What does it mean to devote your life to the truth? Does it mean investigating communist subversion here in America? Does it mean exposing the deadly fentanyl crisis in the Midwest? Or spending late nights and covering deep government corruption? Does it mean persevering over 20 years, even after 4 masked men set one of our printing presses on fire last year? Because at a time when America's traditional values are under attack, it's the responsibility of righteous journalists to uphold truth and tradition.
Welcome back. Apparently, this is what you get when you cross a robot with a taxi. Meet the Ioniq 5 Robotaxi. Hyundai Motor Company unveiled the computer-driven car just this week. It's a joint effort between the South Korean automaker and Motional, an autonomous vehicle company. They say the Robotaxi is an all-electric vehicle that can safely operate without a driver. Passengers do have some control over the vehicle. They'll be able to use different interfaces in the car's interior to tell it things like such when to make an extra stop. Lyft plans to use the Robotaxi to transport some of its passengers in 2023. And international tourism in Hong Kong has been heavily restricted, leaving the industry with a smaller pool of visitors. But new luxurious campsites are now benefiting. NTD Center Thomas reports.
Hongkongers have to quarantine for up to 3 weeks when returning from another country, so most are deterred from traveling abroad. And glamping sites like WeCamp have become popular, attracting first-time campers.
It's actually a good opportunity for us to really try to explore Hong Kong a bit more. You know, if it wasn't for COVID, I wouldn't be looking at glamping options because, you know, I would probably be traveling outside.
Park Nature is another site. This camp's signature caravan is the Stargazer. Glamper Eddie So enjoys the serenity.
Our family can stay quietly and comfortably here at the glamping site. Also, the site here is not that big. There's only 11 caravans here based on my observation, so it's quieter, and there's much more privacy.
The founder of the glamping site says the comfort of this caravan is comparable to a hotel, and notes how the novelty of glamping is attracting tourists.
Hong Kong has a lot of skyscrapers and little countryside, making our industry rare. I think it will be very popular.
Hong Kong's tough international travel restrictions mean tourism hotspots are empty of foreign visitors. But that doesn't seem to be affecting glamping sites. With an occupancy rate currently above 90%, Choi is a happy businessman. Andrew Thomas, NTD News.
That's the latest business updates for today. You can still catch NTD Evening News, though, with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Thanks for watching us on YouTube. Don't forget to catch all of our programs on TV. NTD Evening News is on every weekday at 6:30 p.m. Find your local NTD channel at ntd.com/TV.